Mr. Sreekanth Nadella, the MD and CEO at KFIN Technologies, joins us on the show. Sreekanth, hi, good morning. Thank you so much for speaking with ET now. Well, what happened to margins? They have slipped below the 40% mark yet again. Is this pressure likely to continue for the rest of the year? What's the margin band?
Would you be able to repeat the question, please?
Sure.
There was a bit of distortion.
No worries, Sreekanth. My question was on margins because they've slipped below 40%. So my question was, A, what led to that? And secondly, what's the sustainable number that you're targeting for FY24 as a whole in terms of margins?
Well, thank you. First of all, very good morning to one and all. It's been an exciting start to this fiscal year. We have expanded our margin profile by 200 basis points year on year. Typically, financial services, especially in the mutual fund industry, which is our dominant business line, tends to be backloaded. So Q2, Q3, Q4 are much heavier numbers. So given that we have already hit our Q1 revenue numbers pretty much at par with that of Q4, and with the margin expansion by 200 basis points, we are confident of expanding our overall margin for the year end to be anywhere around 18 to 20%, and with a margin profile of anywhere near 43 to 45%.
You are in a business where a lot of changes are happening because of technology and because of the SEBI regulation. How do you see things moving, at least, let's say, on the mutual fund side or on the distribution side?
Absolutely. The changes that are happening, on the regulatory side are absolutely welcome and much needed. I think as the industry is poised to take off in a much grander manner. If we see over the last 10 years, the numbers have, practically double and triple in terms of the overall assets under management across all asset classes, whether it's equity or passives, debt, so on and so forth. And as the industry gears up to reach the number of 100 trillion over the next 7 years, which is a projection, there are structural changes that are required, certain guardrails that need to be put to ensure that the entire, extremely regulated, well-regulated, business line of mutual funds continues to generate wealth for the investors. The regulation so far had been extremely pragmatic and proactive, which had been largely in the context of protecting the retail investors, and it has done an excellent job. As a SEBI licensed intermediary, it is our duty to implement, in addition to providing our own advice in terms of the policy formulation. None of this, I'd like to believe, that has provided any headwind or will provide in time to come.
If TRs are bought down, if more and more investors, they now choose to go to the direct platform, you don't see on the commission structure front and also on the demand structure or perhaps the new customer acquisition, things could change?
So the new customer acquisition is absolutely the most important aspect of it. Today we have a unique investor base in mutual funds, about a little over 3 crores, 3 to 3.5 crores. And, if you take a look at that as a percentage of the total population, or even as a percentage of the total investable population, it is substantively lower compared to any other country in this world. Probably roughly around 2%. And given every single year, a little over 20 million, youth come into the workforce who are more financially savvy, who are very well served by the digital ecosystem. We continue to believe that the expansion of the retail investor base will accelerate, from here on. Not to forget the fact that several more digital initiatives that have been launched either by the asset management companies or by the registrars such as us, and new asset management companies coming into the foray. So new customer acquisition will be the most important aspect for driving growth. I believe all the digital infrastructure that is required has been put in place. Financial literacy is an idea that AMFI had been driving very, very extensively, something that I believe that will add a significant might in terms of the expansion of the industry across.
Okay. Now, the corporate registry business. More IPOs means more business. Less IPO means less business. Is this business which is cyclical? Is this business where it is difficult to understand how the growth would move because it's a function of A, capital markets, B, new IPOs?
Yes and no. It is. Let me just break down the business of corporate registry in terms of the revenue streams. We today have about 5,800 companies plus, in the Indian ecosystem as our clients. These have been the clients we've acquired over the last 30 years, and they provide a steady stream of revenue, which has nothing to do with the IPO market. That revenue pool constitutes little about 50% of the total corporate registry business, which, as I said, is not cyclical, which has nothing to do with the IPO market. The second big revenue pool is about the corporate actions, dividend declarations, buybacks, right shares, bonus issue administration, so on and so forth. These are the other lines of businesses which constitute roughly about 35% plus of the revenue pool in the corporate registry, which is to a certain extent cyclical. Obviously, if there are less corporate actions happening within the industry, to a certain extent, there will be a small impact. But with the large base of the corporates we have, there are enough corporate actions that happen every single quarter. That leaves us with the last 10 to 15%, which has some relevance to the IPO market, and a series of value-added solutions we provide in the form of technology solutions, including insider trading platforms and what have you, which constitutes the rest of the revenue pool. So broadly speaking, a good IPO market will mean better than anticipated revenue growth. If it is a subdued IPO market, we continue to demonstrate about 15 to 20% growth in the corporate registry business over the past 3 years.
So much for taking time out, Sreekanth, and joining in, sharing with us the outlook for KFIN Tech. That's the plan, to expand their margins by the end of this year, and new customer acquisition is going to be the key growth driver.